Meanwhile, the European Central Bank has held its benchmark interest rate at 2%. Policymakers are keeping any change on hold ahead of the August deadline for a trade deal with the United States.
Last month, the ECB President Christine Lagarde indicated that the bank had nearly concluded its latest rate-cutting cycle. Sam Miley is an economist and forecasting lead at the Centre for Economics and Business Research. Joins us in studio. Sam, thank you so much for coming through to studio. So the ECB pausing rate cuts. Why stop now?
Well, I think the European Central Bank has deemed that much of the work that it needs to do in the fight against inflation is complete. We have inflation back at the central bank's target. Many of the underlying drivers of inflationary pressure are softening. So I think now is a point where the European Central Bank deems that much of the work is done.
How do you interpret this caution coming from the ECB? I mean, in light of all the tariffs and the rising tensions with the US, does it seem a strange thing to do for you?
I think now is the right time for the European Central Bank to take stock on global affairs. You mentioned the volatility that has come from the potential tariff implementation from the United States. The policymakers are clearly adopting a wait-and-see approach to see exactly what the content of any potential trade deal would be, and that would have a significant implication for the outlook for the Eurozone, and therefore it's the right time to pause, take stock, and see where we are after the trade deal has been determined.
Yeah, of course, that trade deal has until the 1st of August. No deal yet. Tariffs could go as high as 30%. They could end up much lower, and there's a whole raft of countermeasures that the EU is considering if a deal isn't met. So it's really an uncertain time. So against that backdrop, can you give us a sense of the rest of 2025, both in terms of potential for growth in the Eurozone and how consumer sentiment is?
Sure. So the Eurozone actually started the year quite strongly in terms of growth, but we expect that to have reversed as of Q2, when the global economy was rocked by the implementation of tariffs from the US. And that is expected to have negative consequences for the demand side of the Eurozone economy. So we expect growth to be much slower in the second half of the year as well.
All right. Well, Sam, thank you so much for joining us in studio. Sam Miley is an economist and forecasting lead at the Centre for Economics and Business Research.